Hi everyone, apologies. We kind of got lost track of the time, so I'm very sorry to have kept you for about 5 or 6 minutes. But welcome to the second webinar of the day. I know some of you were with us earlier on when we were looking primarily at the Forex market. Today we're going to be looking at futures, stock market and the market generally. But before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, I know some of you who come regularly will know what I'm going to say next, but I do see that we have quite a lot of new people with us. We'll be looking at the charts, the chart analysis through the prism of volume and price, what we call volume price analysis. And it's this intimate relationship between the price action and the volume to really tell us whether what we're seeing on the chart is authentic. Is it a real, is it a genuine move or not? And I've got some really nice examples from a couple of stocks. I want to actually I'm going to be focusing primarily on stocks. It's something we've been doing over the last few sessions. I have to say I still haven't quite decided on my stock filtering criteria. I've been looking, those of you who come along know I've been looking at different platforms, some paid, some free, but today I'm going to go back to Stock Beep, which is a free platform, and it's a fantastic platform for free because the data is updated in real time. So volume spikes, all-time high, new highs, new lows, etc. And it's been a great way to pick out some stocks and actually highlight some of the lessons, if you like, the VPA lessons, and what to look out for, both on particularly on the longer term time frame. And I'm glad it's Monday today because I don't think we've done a session on stocks on a Monday before, because what happened on Friday at the close can give you, certainly on the daily chart, some really quite good insights. Bear with me a second, I'm just going to close something that's coming through on Financial Juice. Much as I like that, I love the guys there, but that's it. They've turned off now, so I don't have them in my right ear. Okay, so that's VPA. Also, what I want to bring in today a little bit, those of you who, I know we've got some of our Forex trading students here as well, will know that the way we approach the Forex market is we obviously look at the charts and become extremely proficient in volume price analysis, but we cast our eyes wider. We look at what's happening in related markets, and we also look at obviously what the fundamental news is, and we sort of put it together and see whether what is going to be the main driver for a particular currency and a currency pair. It's what we call a 3D approach, and for stock traders I think that's what I would suggest that they do, that you look beyond the chart. Even if it is a very fast chart, you don't anticipate being in that trade for very long, because the reason is nothing moves in isolation. What we also talked about this morning was a little bit about the psychology and whether, what are you going to be suited, what sort of time frames you're going to be suited. We have a very specific module in the Forex program, but really it's applicable to whatever you trade. And I'll just give you a little pointers for that as well. Now for VPA, what we've done is we've actually come up with some worked examples, because the great thing about this system, this approach, not system, that's the wrong word, is that these signals, these setups, these patterns, they recur, they happen again and again in all time frames. And one of the ways that you can do, you learn about them, is just look at charts, which is why we put 200 examples in the book that accompanies the main VPA book. And again, all time frames. This one is primarily for stocks, indices, and there are some commodities as well. And those of you who follow my blog or follow me on Twitter will know that charts go up at least a couple of times a week, and it happens to be the IBM chart. It doesn't matter that it's the IBM chart. It was a great example of Wyckoff's second law. So you see it on IBM, happened to be the weekly, but you know what? You will see it on a 10-minute chart. You will see it on a 2-minute chart. And once you know what to recognize, you know, you'll be able to take trading decisions with a lot more confidence. Right, VPA. We talk about volume and price, but we use candles, candle patterns, and support and resistance. And we use a volume-based support and resistance and price action-based support and resistance. And you can add to the methodology this foundation, standard indicators that you find on your platform. We've actually developed very, very particular ones, and we will you'll see them on the charts, and David and I will both explain them to you. Right, while I just set up my chart, I'm just going to pass over to David, and then he can come back to me. Apologies, David is actually doing something else, so he'll be with us in a second. Right, I mentioned earlier what is happening in the in the broader market. So a very quick look at the calendar for today, and really it's all about what the Fed is saying. We've got Powell today, we've got Powell tomorrow, we have endless speeches, comments from, as we can see here, we've got 1, 2, 3, we've got 4 of them today, and we have another 1, 3 tomorrow. Well, the same person speaks twice, but you know, 3 lots of Fed, and it's not, as someone made the point, it's not even Wednesday. So the Fed is, you know, members are out there, not even, they've said so much, you can get, all this stuff can sort of, you know, just, it goes in one ear and out the other, But the point I'm making is the market is paying a very close attention to what the Fed is doing, what the Fed wants to do, because obviously, as you would have read in the headlines, markets are at what we call an inflection point. The reason they're at an inflection point is that there's a lot of nerves, there's a lot of worry that inflation is possibly going to take hold. Why do we know that inflation is going to take hold? Because the bond market is telling us so. Bond yields are rising. So, you know, what is the narrative? So as a trader, even if you're a day trader, you have to be aware of what is the market focused on. Now, sometimes that focus is a distraction. It's deliberately set out there. So everybody sort of, it's a bit like a magician's trick. If you look at, if you're interested in magic and how magicians do it, it's distraction. So they pull your focus to what they want you to consider, but actually something is going on over there, as it were, and the market and the market makers, that is pretty much how they operate. So recognizing whether something is genuine or not, the chart will tell you if you read the chart according to the principles of VPA. So as we say, you know, for example, if the you know, everything is rising, everything is bullish, everything is happy, the market is wonderful, but actually that may be the sentiment that's being you know, written about and spoken about in the wider market. But if you look at the chart and you think, do you know what, that's fine, but you know, hey, I'm seeing some anomalies here. I'm seeing narrowing spreads. I'm seeing narrowing spreads and a ton of volume, and the price isn't going anywhere. You know, what's going on? So it's, you have to have this almost like cognitive dissonance. By all means, trade what you see on the chart, but at the same time, as I said, be aware that, you know, all this is going on in background. So clearly, what's going on in the bond market the next couple of days is what the Fed is going to do, and it's really how they're going to control, they think they're going to control this rise in yields, because once you get inflation take hold, obviously it's going to cause a huge problem, well, for all of us, not just the stock market. What we've also seen, and certainly saw it last week, this is the Nasdaq. Obviously, we had that big sell-off day last week. That was Wednesday, Thursday, Friday. It had a bit of a recovery. It certainly found a base, and today it's going higher. Now, it's going higher. Tech stocks, as reflected in the Nasdaq, they are more sensitive to inflation. So therefore, they're momentum stocks, they're growth stocks. A lot of companies, you know, are base their business on borrowings, if you like. The bond market is just the cost of money. How much does it cost you to borrow money? That's what the bond market tells you. And if the borrowing costs go up, then you could have a problem. So we've had this divergence between what is been going on in the NASDAQ and what's been going on with the Dow Jones. The Dow Jones is more representative, if you like, of value of defense stocks, if you like. And if we look at the daily chart for the Dow, I don't think there's a problem with this particular chart, but it did have a bit of a sell-off. But you can see here, while the NASDAQ was kind of really in a bit of a whipsaw, the Dow was sort of quite happily marching higher. So that's the kind of trading environment we are in at the moment. Right, get back to what is happening with stocks. What I've done, let me just bring up Stock Beep to show you. And I really do, because I think this is such a great way of picking out a stock. These are all been selected for you based on certain criteria. Now, I've actually gone for unusual volume stocks because they're particular to the VPA lessons that I want to highlight for you. And you can read. I think they do. They don't do all the stock market, to be fair to them, but there's enough there to select and also for lessons. The metric here is the relative volume, and the relative volume is basically it's how can I describe it? The best way I can describe it is all stocks have a sort of average volume in terms of that they trade every day over, calculated over a certain period of time. Well, relative volume, this is the ratio, which basically tells you there's been a massive increase in that volume. I mean, 69.9 as a ratio is ridiculous, as a percentage. I mean, there's a huge amount. You think, oh, great. Well, that's good because obviously we know that price has gone up and has gone up very, very strongly. But you have to bear in mind that when you have an inrush of volume, you also have volatility, you have momentum. Now that can work for you, but it can also cause you to see a chart where there's a lot of whipsawing. There's a lot of, unless you are on the very fast time frames, it can be very, very, tricky to trade. And that comes back to what I said about psychology, because what we talked about this morning and what is in our Forex program is this. The psychology module is premised on personality traits. There are 5 main traits that are common to all of us, and it doesn't, and culture, even across cultures. One of the traits is neuroticism, and it's essentially your ability to how you respond to emotional situations. And there really isn't anything more, lots of emotional situations, but trading is certainly emotional because first of all, you've got money at risk, and secondly, it's a manipulated market. So how much more stressful can it be, as it were? There you are, you do your analysis, you put your money in, you hope to get a return, and the market just blows up in front of you. With neuroticism, there's a spectrum. Most people are in the center, like a distribution curve. But you have to take a test and measure it. And the issue is this: is obviously there are, once you come to not so much the extremes, but at the end of that bulge in the middle of the bell curve, is that if you are more towards the lower end of the scale, which is where I sit and certainly David sits. And as I said earlier, I may be Italian, but I'm quite calm. You're quite, you can absorb the stresses, if you like, the emotional stress of trading and other things as well. And you think, oh, great, well, I want to be at that end of the scale. Well, it's not so much as, low is good and high is bad, because everything is there's advantages and disadvantages. So if you're at the other end and you're more, you know, you get anxious. You have things cause you anxiety. If you're out of your out of your comfort zone, as it were. As a trader, what you then have to do once you recognize it, it will help you determine, first of all, the kind of market you want to trade, and also more importantly at the time frames you want to trade. Because if you are more at the top end of the where you become more anxious, do you really want to be in stocks that are whizzing about all over the place? Because it's that stressful enough, and you're just making, it's becoming more uncomfortable for you. If you're at the other end, perhaps, as where David and I are, the downside of that is, sometimes you can be so chilled and so laid back. When we see drawdowns in our accounts and what have you, and things turn against us, it doesn't really bother us, but sometimes you should be bothered. Do you know what I'm trying to say? So it's not a clear, one is good and one is bad, but the more important is that you know where you are on that spectrum. So how does that apply to these stocks here? So what I've done is I actually went through a bunch, and obviously bearing in mind that the higher this number is that we see here, the kind of price action that you will see on the chart will be massive volatility. Volatility triggers all over the place, whipsaw price action, and you go, whoa, I can't, that's not for me. But the higher that is, there are traders who thrive on that. That's what they enjoy, fine, but they understand that. So to give you an example of what that would look like, I will show you that. But also, I've also found stocks which do have good volume coming in based on what happened on Friday. And actually, when you look at the chart doesn't look too bad. So, you think, okay, but unless you know what to look for in terms of VPA and the volatility, it's going to be tough. You can't just sort of arbitrarily go, well, I'm going to trade that because I've been on a forum, or I've been on I don't know, on Twitter or what have you. Everybody's piling into that stock, so that must be a good stock, a good market. Let me dive in. I think taking a step back might not be such a bad idea. The nice thing about the way the volume stocks is, first of all, you have all the tickers. You've got the percentage change. We're not looking at the percentage change. We're really looking at, this is the relative volume. It gives you what it is that over 5 minutes, fine. This is also quite important. This is the market cap. Now, obviously, in the market cap, the smaller cap stocks are going to be more. They will be more volatile. It's not such a big company. So you've got here, this is 28.4 million as opposed to this one, CHNG, you've got 6.93. When David and I put together the criteria that we think is the kind of a good set of criterion to look for in terms of selection on the fundamental side, because if you like the cap, the metrics for that company, I would classify that as fundamental data. It's equivalent to the fundamental news releases that we have in the currency market. Market cap is probably one of the ones that you really need to pay attention to for a number of reasons. One is when it's a much bigger company, a much chunkier company, manipulation is more difficult because you don't have, there's a lot of outstanding stock. That's another metric that we'll be looking at. So if the market makers are going to start a campaign, and if you've got the book, you will know what I mean by campaign, it's going to take time. If you've got a smaller company, obviously maybe just starting, yeah, it might whiz around all the time, but if there's not a lot of floating stock, if you like to act as a kind of cushion, that's when you'll find it whiz up and down. Now, as I said, some traders might like that. That's fine. Right, what I want to pull up is, let's have a look, CPRX. This was one that I found, and it's got some really nice lessons. Let's have a look, CPR. There was another one which I will try, and I didn't write it down, it's a bit silly. Right, CPRX. Let's move my thing out of the way. Hold on a second. By the way, if you've got any questions, just pop them down into the chat box and we'll very happily answer them for you. I looked at CPRX. Let's just refresh our memories on what it is. What is this CPRX? What have we got here? Yes, the reason I chose this, paradoxically, having said a cap, it's only 453 million, so it's not a mega stock, as it were. When I looked at the chart, I thought, oh, that's, it doesn't look too scary, for the want of a better word. Right, this is the daily. And really what I want to draw your attention to is two sort of really nice lessons here. First of all, we had this break higher from the volume point of control. It's quite a very nice hammer candle, not a huge amount of volume underneath it, but for this stock, remember this is a small cap stock. And the other thing about this stock is, other than this volatility candle here, it's kind of okay. You haven't got massive range. So also, that buying came off a really nice volume support. We look at support and resistance through both as price-based support and resistance and volume. If we look over here to the left, this is where we had a very strong support platform at just under 340 a stock. So I said, this is a tiny stock. I have to confess, when I looked at this, I was surprised, because normally at this price it would be, well, it's just, you would shut your eyes and even I would balk at it. But it's really respecting everything that I like to see in a stock. First of all, we've got a platform of support here. It sold off from here, came back. We've got the volume point of control. This is a volume-based. Volume-based. It's volume and price over time. So it marks out the sort of congestion phases, and it's this is where it was trading. If we go back here for quite a period of time, it was contained, was going backwards and forwards. It really didn't look as though it was going in. We had the first breakout here. We had unreasonable volume. We had a gap up, another gap up. Then we had the only volatility candle on this time frame, which is unusual, as I said, for this cap for this type of stock. It did actually behave pretty much how we expected after the volatility. There was a retrace into the spread of the candle, a big down candle, but look at the volume underneath it. So if you had been looking at this stock for a breakout to the upside, and then you saw the selling, some selling coming, probably a profit taking, which I have to say, from here to here is pretty decent. You get this retrace, but what it told you is there's really not enough volume to justify that spread of candle under that volume. Is a no-no, is an anomaly, and it did actually carry on higher, and we did get another pullback. Again, it didn't go any higher. It could have been a piece of fundamental use. It could have been some important resistance and support on the lower time frames, but that's awfully interesting. The point of it now is that we are down at it. Eventually it came down here, because what I'm interested in is this hammer candle. The price action did actually go past the price-based support, but found what we call volume support. This is part of the volume point of control, where you have this kind of band, if you like, towards the extreme of the indicator. It does act as very, very good support and resistance. So it bounced off there and back to the volume point of control, and up it went, and fine, okay, whatever it did. Now, this is the candle that is quite interesting. Now, this is a nice little shooting star, and if you were a price action trader, you looked at that shooting star and you say, oh yeah, fine, okay, down it went. But look what happened the next day, because under a shooting, it went up, and you think, yeah, but the price action went down. Yes, but there was no volume underneath it. This is what I'm saying. These are the anomalies that you want to see. I'm not saying it doesn't all, it doesn't go down on, you see a weak candle like this and it doesn't go low. It did actually go lower. If you see there, it did, but it actually recovered. Now, this is Friday. Now, this is interesting. Look at the volume under that candle. As I said, this is Friday. Having seen that, which was a failure, having seen that was a Friday, what do you think is likely to happen today? And I'm so pleased we're doing on a Monday, because one of the things our students do on the Forex program is they look at the end, what happened on Friday? What was how did the market close? As it closed in positive? Was it a negative? Overall, were the indices up? Were the indices down? Was some stocks, going against that sentiment? And this is what you can look for. So even over the weekend, it's a great time. You look your stocks that you may or may have not selected, or maybe go off something like Stock Beep. You look at what happened on Friday, and that would have given you, together with that failed signal and that candle with that volume underneath it, you could be what would the probability be, unless there was some awful disaster over the weekend and Monday morning, who knows? The probability is that this is likely to go higher. And I did actually open up, gapped up quite considerably. It's gone up and now it's come back down again. Fine. And looking at the 10-minute chart, because you can also see that the other way to see it is on the 10-minute chart, the last candle. Let's have a look. Last candle of the day. Where are we? Let's have a look. Right, where are we? So yes, if you look here, this is class. This is 8 o'clock. This is last Friday, and you see this. Now that is a volatility. Clearly, it's got a huge wick to the bottom of that candle. Ton of volume underneath there. Nice support platform here. Support platform under there. Lots of volume under that candle. And you think, as I said, it was a $4 stock, and it's not so spiky and whipsawy as some of these some similar stocks, similar cap stocks, as it were. On the 10-minute, we had this rush up on volatility. Volatility gives you momentum. Outside of the average true range, the indicator is triggered. What happens? Well, it has actually got retraced within the spread of the candle. We've had a sort of a reversal. We either get a congestion or a reversal. Now what happens is the volatility candles of themselves will also give us some key levels that are going to be important. When the price reaches those levels, it will possibly pause, and it has to go through either for a complete reversal or to carry on higher. So this is one I'm going to keep my eye on for the rest of the day, and also for next time, because as I said, it's for the type of stock that it is, and the lack of whipsaw price action really does can tell you so much about what is happening from a VPA perspective. Where is it? No, it's not cooperating at the moment, the Ninja platform. Right. Another one I found out again was Uncle Sol. Let's have a look at here. I literally just went down this list because I just was curious what I wanted to see, because obviously the lower these numbers, then the less volatility, less momentum you are likely to get. Right, Sol. Let's have a look at Sol. What happened on Friday's close? In fact, let's go to the 10-minute chart. It's probably easier. Let's have a look. Yes, and again, you had, I do accept there's volatility that came in as well, but with a lot of volume underneath it. It went up, weakness came in. What can you deduce from that? Well, it reversed. It did actually go into the spread of the candle, and down it has gone today. But there's some buying coming in on that one. And let's have a look. Anomaly on 10. I've written these down. AEVA. Yes, this is the one that I was looking for. This is really interesting. we have a consolidation phase here. This is obviously coming up to the close. We've got some really strong resistance, as we can see here from the accumulation and distribution an indicator. It's at the volume point of control. It's actually in a range, you can see here, between, it's got some price-based support, a volume-based support, you've got the VPOC. So it was kind of, after this initial push higher, retrace into the spread of the candle. And what did I say? The high and the low of the volatility candle, it kind of moved sideways for the rest of the day. This is the candle that caught my eye. And you look at that candle there, and you look at that volume underneath it, and that immediately draws your eye, because I appreciate it's the end of the day, but it's a very compressed candle. So there has to be buying underneath there. Yes, it's red. Yes, there's a small wick at the top of the candle, but there has to be, you know, at the end of the session on Friday, buyers came in. Maybe they were, you know, bargain hunters, who knows? So I just thought it was just a really, really nice. Now, this was on the 10-minute candle. Sometimes the 10-minute, the 15-minute, they are more, they illustrate this better than perhaps the daily, that's the daily candle. What has happened today? Bang, straight back up. Volatility, straight back in. As I said, you can't help it with these stocks. It's part of their nature, as it were, and it's just something that you have to accept. What I've also got on here, I've got the Cameroon indicator, and I've got the R3 here, the third level, which is also the third and the fourth levels are the two most important levels where we can get some congestion and some reversals. And finally, and I'll pass over to MRKR. Right, let's see what I liked about this stock. Oh, what's happened there? Let's move on to the daily chart. That one. Oh, there we are. It's sorted itself out. Yeah, a similar sort of. Let's have a look. MKR. Like my system's not not. No, listen, what I'll do is let me pass over to David, because I want to get the daily chart sorted out for that one, so I can come back to that one later. So that's all I've got to say on that one. Look at Stock B to improve your VPA, you know, to get a better hang of VPA. Go down that list on a Stock B. To be honest, you can do that with any chart, but see whether you can see those anomalies. Look at the end of the day, particularly on a Friday. Look at the levels and just see what is the probability that this is going to go up on certainly at the start of the week. But be aware of what is also going on in the broader market. As I said, we've got the Fed, you know, these markets, everyone's, you know, you can't move for people saying there's going to be a crash, there's going to be a crash, there's going to be a crash. Yes, there's going to be a correction. You know, yes, you know, bond yields keep spiking higher. Yes, you know, the Fed, all the central banks lose control. It could be financial Armageddon. You know, God willing, it isn't. But at the same time, you know, you have to look at what is on the charts and trade accordingly. Can I pass over to you, David? Is that okay? Yeah.
Hi everyone, hopefully you can hear me okay. Anna's just going to check, make sure. Speak. Can you hear me okay? Yeah, fine, perfect, lovely, great stuff. Okay, I've just got the three indices up here. This is on Ninja. I've got TradeStation down here, and I've got TradingView over on the right-hand side as well. Just seeing what's what. Basically, since the open, and you've got to remember, this is America is now, the clocks have moved in the US session, so, or US at any rate. Ours move at the weekend, so we're already into the session, whereas normally we'd only be 15 minutes in, so we're well into the session now. This is on the workspace with the three sisters. They've got the YM, the NQ, and the ES along the top there. That's on 5 minutes. And then down at the bottom here, I've got the daily charts for the three of them. These are the June contracts we're in now. And the one that's leading the way, as you can see, is the NQ here on the day. Pretty strongly up. See what the volume is like at the end of the day. There was a certain amount of support came in, just to pick up on what Anna was saying about looking at the daily charts. It is an important facet. It doesn't really matter if you're intraday trading or not. It just gives you perspective on possible direction in terms of what is likely to happen. Obviously, we've got the volume point of control here on the daily chart, so we're expecting further congestion. We had this resistance level come into play pretty strongly, where the market topped out just below 13,300 there. But basically, we're well up on the day. The ES and the ES is kind of following suit, not so bad, but the YM is very sluggish at the moment. You can see it up here. It's not really, yes, it's bullish, but it hasn't really got the same momentum as you've got on the NQ. So we've had a decent amount of momentum there. Usual volatility at the open is what you expect to see. This is now 130. Normally this would be 230, obviously 130 today. We had the normal volatility at the open. Lots of racking about, and then the market gradually gets underway and starts to find momentum. Lots of dojis, lots of indecision. Now we're breaking away from the volume point of control and starting to get into smoother price action. Trend monitors bright red, good volume under here, moving up to through this out of this heavier congestion volume around the volume point of control histogram, and now we're moving up into lighter volume. So it will require less volume down at the bottom to actually drive that price through there. So that's basically where we are in terms of the three indices. Let's just go on to the multiple time frames. I'm not sure which one I've got there. Okay, I've got the YM. Might change this over to the NQ actually. Bear with me a moment. Are we on 0621? There we go. Okay, so now we're on the NQ. Let's reload these up again. Come on. Very sluggish. I have got a lot of stuff running here. There we go. This is 15 second, this is 1 minute, this is 3 minute, this is 5 minute, 10 minute, and 15 minutes. So this is just straight through intraday, scalping on the indices and basically providing a framework for what is going on in terms of equity markets. In terms of what's going on in the currency markets, this is on the slower time frames. I'll just pull this over. Just pop that over. This is on Trading View now. This is on the 2-hour time frame for the CSI. So we've got the yen selling off, which is good. We've got the dollar selling off, so that's good for sentiment, obviously. That's the Swiss franc, which has been rising pretty much throughout the day. We've got the commodity currencies, well, certainly two of them at any rate, the Aussie and New Zealand rising, the CAD is falling. So they're kind of out of sync at the moment. It doesn't always hang true that they have to follow one another around as risk commodities. It's the same is true of the Swiss franc. Normally, you would expect to see the Swiss franc following the yen and the dollar around. On this occasion, it's parted company. The same is true of the Canadian dollar, which is falling, but the Aussie and the yen are rising. Part of the reason for the Canadian falling is because we've seen quite a sharp fall in oil, which is something we write a lot about on Anna's blog as well. Hit $66, it's come right off. I'll show you that in a minute. There's some interesting volume associated with that as well. This is the FTSE 100, that's what's going on there. And this is basically, go away, this is basically the yen pairs. Pound's been selling off, which is kind of against this yellow line. This has been selling off against the sort of broader sentiment in terms of yen. And that's why the Aussie yen and the New Zealand yen, these two are both up, whereas the CAD yen is perhaps not so strong because the CAD is following the same direction as the yen. So that's it in terms of sentiment. You can see the VIX down here at the bottom. That's falling away down to 20. So basically, we've got a scenario of what we expect to see in the currency markets, except for perhaps the Swiss franc. We've got the VIX moving in the direction we would expect it to move in, and we've got the currency pairs moving in their direction as well. So it all kind of stacks up into what we would expect to see in terms of movement in the indices. And that's where we are right now, coming to a bit of a pause point on the NQ. And if we drop down onto the 5-minute chart, just have a look at the volume there. We had two candles here. This was rising quite nicely on those three candles, but then the last one here in the set was on lower volume. So we've got a market that's rallying nicely, and then we come to a fall away in volume. So we've got the same price spread, if you will. And if you look at the previous candle, albeit it had a little wick to the upper body, you would expect that this volume to be pretty much comparable with that volume, because in fact, even more so, because the spread of this candle is actually wider than this one. So there's a little bit of selling coming in here already. And then you get the fall away in volume on that particular candle, which is really telling you, it's not telling you that, you know, panic, get out, but it's telling you that just be aware that there is some possible selling coming into the market, or it's a lack of participation, if you want to put it that way. There's a lack of volume, there's a lack of participation in terms of driving the market higher at this point. And that's what it's telling you. And that's what VPA does for you. It just gives you the confidence to hold positions. It's also hugely important when you're looking at reversals from primary. Is a reversal you're seeing merely a pullback, or is it actually a reversal of a primary trend to another primary trend? In other words, from bearish to bullish or bullish to bearish. And the interpretation of whether the pullback and reversal you're seeing is actually a reversal from a primary trend higher to a primary trend lower, or vice versa. Is it merely a pause point, which come in all time frames? And it's one of the most powerful applications, because when all's said and done, the biggest problem we all face as traders is actually holding a position in, once we've got some profit in it, because the first emotional reaction is to take that profit off the table and get out as soon as it starts pulling back against you. And the problem is we end up with lots of small losses and fewer but small profits. And the mathematics of this business is small losses fine, and we have plenty of them, but the bigger wins have to outweigh them. There are fewer of them, but they have to be much bigger. And that's the problem every single trader faces. And it doesn't matter whether you're intraday trading stocks or index futures or currencies or bonds or whatever it is, that is the number one problem. It's not really about understanding markets. It's about managing your emotional response and understanding your strengths and weaknesses. It's all to do with the psychology, but it is managing that. There are mechanisms. VPA is very powerful in that sense. And also, of course, in terms of using the indicators, these indicators, the reason we developed the trend monitor was very simple, to try to help to keep you in through those periods where the market starts to pause, congest, maybe pull back a little bit. Is this a change in primary trend, or is it merely a pause point in a trend, which we see in every facet of price behavior? And using it in multiple timeframes in exactly the same way as well. At the moment, we've got a pullback here on, this is on 15-second clearly, but the principles of VPA and the indicators and the way they work are identical. This could be a stock, could be an index future, could be a currency pair, could be anything you care to name. And what we're seeing at the moment is we've got the volume point of control here. We've got these levels of price on the accumulation distribution, which are often clustered around the VPOP, because that's where we get congestion. Once you start to break away from them, they either become support or resistance. We've got the VPOC histogram up the right-hand side. So we've got volume falling away. We've got a chunk of volume here, so we need to push through that with decent volume. We've got higher volume rising there, so that's fine. We're starting to push away. If we're going to break out of this region, we've got to get up to this level here where we've got low volume. We want to see the volume building here. We've got, that's the volume's fallen away, but then so is the price. So price and volume on that particular candle are in agreement. They're just not very demonstrable. But they are in agreement because we've got a narrow spread and we've got the volume fall away, so that's fine. It's when you get the anomalies of a wide spread with low volume, or a narrow spread on ultra high volume, etc., that's when you start to see those anomalies, and they give you those clues and signals. Now we're starting to see push through. Got to push through this level. A little bit of weakness there. We've got a wick to the upper body, decent volume under it. We've got a level of resistance come into play with this blue line on the accumulation distribution indicator. Sorry, click that off. This basically presents a visual picture of support and resistance. You can look at the chart and say, okay, this is very strong, this is very strong, this is pretty strong too. And that's it, job done. You don't have to worry about it. It does it automatically. Every time these leads levels are tested and hold, then the lines thicken accordingly. That's the way we've designed it, just to give a visual representation of support and resistance across the piece very quickly on all the time frames. That's where the weakness came in. We're expecting it. We're not, it's all about anticipation. What are we expecting to happen next? The VPOC's now jumped to that level because the volume there is greater than it was lower down. We're now in a congestion phase, and on we go. And that's just reading, the chart at the live edge. 15 seconds chart I love. If you're a scalping trader, I use 15 or 30 up to the minute. It's just, it doesn't suit everybody. There's no right or wrong way to trade these markets. It's just, you have to find what works for you. A lot of people will be horrified trading those sorts of time frames. and others won't. Some traders will trade multiple times a day and others won't. You have to find what works for you, what fits within your parameters of your time frame as well, what you have available. A lot of the students on the Forex program, they have full-time jobs, which is fine. It's what we encourage. Learn while you're being paid by somebody else. Simple as that. Let's just have a quick look. I just want to show you Apple, moving away from the stocks Anna was looking at. I mean, this is a stock that it's obviously heavily traded. When you go down to these real big stocks, the one thing you can guarantee is that they will be heavily traded. You'll get a lot of price action in the pre-market. In the context of what goes on thereafter, clearly it's not the same sort of volume levels. This has been a really nice trade. This is on the pre-market. You can barely see the volume down here because you wouldn't expect to. And we've got a massive spike over here, which is distorting all this stuff. I'll just pull this over a bit. There we go. Makes it a little bit easier. So this is all the pre-market carry on, which kind of gives levels. It gives you a sense. You see the spikes down all the time. They set the floors and ceilings. And the reason a lot of intraday stock traders will focus on the pre-market is precisely that reason. It will give them levels against which to benchmark when the price has broken through those. In this case, it's pretty clear where the ceiling was. It was up here, and where the floor was. So those are your kind of levels. It's like a congestion phase, and they just give you a benchmark as to where that stock may well break away from the pre-market, and that's what they're always looking for. So they've spent a lot of time focusing on the pre-market. This is rising nicely, nice little rally. This is a fluid stock. You can get in, get out, absolutely no problems at all. Hugely traded, obviously, rising nicely, all the same sort of parameters. You can see the trend monitor here, nice and blue, nothing to frighten anyone there. Good volume under all these, nothing particularly scary. This is on 1 minute, so again, this is pretty quick, but the same sort of principles apply. I'm just sort of picking over. Let's have a look. I mean, you've got this little pullback here. What did we see there? Well, we saw the volume falling away, so chances are this isn't really going to develop into anything very much, because if you were going to see this as a reversal, let's say this is an uptrend and now we're going to see a downtrend take hold, you would expect to see several things. You'd expect to see spreads widening. You'd expect to see volume rising, and that would give you a confirmation that actually, do you know what, this is a primary to primary reversal. We're not seeing it here. This is just a minor pullback. The volume's falling away. The spreads have narrowed. This is not heavy selling. When you get heavy selling coming into the market, it's a cascade. It's a torrent of selling hits the market. It's just like a waterfall, and as the waterfall develops, you get wider and wider spreads until it hits the bottom, and at that point, you're seeing stopping volume coming in. You're seeing spreads narrow. You're seeing deep wicks to the lower body, and so on and so forth. None of that here. This is just basically rising, and it's also rising obviously because the NQ has been doing reasonably well, rising quite strongly. I'm just checking over on see what's going on in terms of everything else on the right hand side. Not a great deal to reveal there. And then it's a question of you have slower time frames to give you additional information. You get the volatility trigger, you get the volatility trigger again, which is what you expect at the open. And then on up we go. We're moving up into low volume here in terms of, what are we on here, 15 minutes. So on the 15-minute chart, the volume on the VPOC has fallen away dramatically. There's very little there that is going to present a barrier. So from an upstream point of view, from a 5 or 10 minute, that's good news. Then you're down onto the slower time frames. That's 50. Move down onto this one. Just pop that up full size. This is on 60 minutes, so very slow. I've got the Camarilla on here. And this is what you're looking at the whole time. So if you were going to trade this stock and hold it, let's move that out of the way. If you were going to trade this stock and hold it or trade it intraday, and you were looking at that from a perspective of maybe you're going to be in here for 2, 3, 4 hours, then what you're looking at is, well, what's in the way on these slower time frames through 123, maybe up to 123.50. And the good news is once you get to 123.50, then you're into a much lower area of volume on the volume point of control. So that should equate to a much easier progress for the stock through this level here on this particular time frame. And it's just aligning the charts to whatever it is that you're trying to do. If you're an out-and-out scalper, you'll be down at one end. If you're trading on slower time frames, you'll be in the middle. And if you're trading on the hours, 4 hours and the dailies, then you probably won't be sitting in front of the chart all day long. You'll just be placing positions, maybe using not market orders, you'll be using limit orders to get you in, and take profit orders to get you out, and so on and so forth. It's all about what it is you're trying to do. This is on the daily at the moment. So down on, sorry, I beg your pardon, this is on the weekly for Apple. You can see where the volume point of control is, and we've had this selling coming into the market. It doesn't look great, doesn't look terribly strong at the moment, and obviously what we want to see is this breaking away from the volume point of control and start to move back higher again. But at the moment, as we're at this point, then we're looking at a congestion phase until we start to see a breakaway from that level. Just go back onto the indices, see what they're doing. Okay, hit a bit of a pause point on the YM. The NQ is still carry on progress higher. I don't know what time all the Fed members are talking. The UK index has just rolled over. It's dropped about 20 points over there. Yeah, it's falling quite strongly actually at the moment. Yep. Okay, fine. That may be reflected over here as well in some weakness. VIX is starting to pick up a little bit, not hugely, but a little bit. Just want to show you oil, just a couple of futures here. And of course, if inflation does bite and really take hold, then one of the big winners is going to be gold, for sure, because gold is always treated as a hedge against inflation, and therefore it will be one of the big beneficiaries. So while everyone else is struggling, gold will be a beneficiary. This is the daily, this is the WTI, this is on May contract, daily chart. We write about oil frequently on Anna's site, so you can follow the analysis there. But basically what we said was up at 66, just over 66, $67 a barrel. That's where it was going to hit resistance, because there's a ton of resistance on the weekly chart, which was coming into play, which indeed has happened as we expected. We're now down at the volume point of control again, which is currently sitting about 60 spot 50 per barrel. What's interesting about it is this big volume here that came in. We had this volatility trigger, ton of volume under it. It's what we expect to see always when you get the volatility. You're looking for the volume, the associated volume. It means the big operators are in there, or the market makers are in there. Ton of volume came in under there. What are we expecting? At the very least, congestion, possibly reversal. We're getting a reversal, but there's a ton of volume under this candle as well. Narrow spread, lots of volume under it. It doesn't look particularly strong. And in addition to that, we're trading around the volume point of control as well. So it looks like there's a load of selling coming under that candle. It's not looking particularly strong. Probably going to trade around this region for a while anyway, because we are at the heaviest volume here anyway, at the volume point of control itself. But it's just interesting to see those two candles. And really that's all it's about. It's just, you look at the candles, you eyeball them, you look for unusually low, extreme highs, so on and so forth, to help you in the analysis when you're on an intraday. That's what we're seeing at the moment. Bit of selling coming in. This is on 15-second. I've got the same time frame arrangements. A little bit of buying came in under that candle. You can see the volume there. Bit more under this one. So this is the price waterfall. We're starting to see weakness. This is one of the candles you was looking for in a price waterfall is this. High volume, effort to rally, failed, down. Effort to rally, not great volume under there, on down we go. Then we start to see more buying coming in under here, more mopping up. So it's the buyers are stepping in, and that's what you're looking for the whole time. It's just an analysis you do in real time, literally bar by bar, candle by candle, and you just just pick it up in that sense. Now the volume point of control is down here, so expect some congestion to build around here. Trend monitor's red, but it's transitioning possibly into a bullish sentiment. But if it doesn't, it'll just come out the other side and go back into red again. In other words, this is just a minor rally in a longer term, a move lower. Just go on to the 1 minute, a little bit not quite so frenetic. Heavy selling under this candle. You've got another candle here, but if you look at it in the context of this one, it's about half the volume. So what is actually happening? Well, intuitively, it would suggest that the selling pressure is diminishing, because if this candle is pretty much the same spread as that, ignoring the little tail on the bottom, then why have we only got half the volume under there? So the sellers are either being absorbed or they're stepping back from the market and they're moving in. The buyers are starting to move in. So I just wanted to cover all. In terms of soft commodities, in terms of inflation, obviously, it's a major factor in terms of inflation. This is what's been going on in terms of soybean. We've had a big rally in soybean back end of last year, early part of this year. Now we're into a big congestion phase, huge congestion phase as far as that one's concerned. Just waiting. Is it going to break to the upside and move on higher, or is it going to sit around here and then break to the downside? The other two softs are in a similar situation. That's at the VPOC as well. And then for wheat, that was corn. Let's just have a quick look at wheat. Wheat has actually started to potentially break away from there, possibly give a clue to what else is going on in terms of the other two markets, soybean and corn. But again, this could be any chart, doesn't matter what. Indicators work in exactly the same way: accumulation, distribution, the volume point of control, histogram, volume along the bottom, and the trend monitor as well. All work in exactly the same way. Doesn't matter what the chart is. Right, I think I'm going to pause there because we've been going a little bit over an hour just to see what's going on. FTSE 100 is bottoming out. It's got a volatility trigger on 5, so that's just pulling back a little bit. The yen pairs have kind of paused a bit. The VIX is sliding lower. So I guess we're just going to have to wait for the next round of speeches from the Fed and see what drives the market. Let's just have a quick look and see where we are on the indices. There we go. There we go. Oops. Didn't want to do that. Get rid of that. Go away. There we are. Okay. So it's crawling up. It's not roaring up. It's kind of crawling. That's the NQ. The ES just pausing a little bit, and the YM as well. But the volume point of control very much in evidence on all three charts. And you can see here the price action on the YM, very narrow. NQ is fine, nice spread, and ES is sort of halfway the NQ as well. So they're all generally going in the right direction, but not with great momentum, certainly not that we've seen outside of the NQ at any rate. In terms of where all the indicators, you can find all the bits and pieces over at quantumtrading.com. This is where all the indicators are: MT45, NinjaTrader 7.8, TradingView, and TradeStation. I've got TradeStation down here. I haven't pulled it up. I'll just pull it up very quickly. There we go. That's on TradeStation. I've just got the NQ again on here. I've got time and sales running through here. So this is all the sales actually going through the market right now. And what I'm looking for is, I'm not interested in all this shrapnel down here. I'm looking for the big numbers, anything above 50, certainly 3 figures, and the reaction of the market to to that figure that goes through, and watch what happens in terms of price. I'll probably have this to a much lower time frame. I have this on minutes, something like that. Just want to see what happens when those big numbers go through. Up here, I've got radar screen, got all the time frames, and I can see what's going on in terms of trend monitor across them, and it tells me when the volatility indicator is, so I know exactly what's going on. Just click on any of these, and that's on the 10-minute. Let's click on one of the others. Let's click on the 3-minute. There we go. So I can rattle through and just see what exactly is going on in terms of sentiment, in terms of where I've got a volatility trigger come in. And I can go through the charts in literally a few seconds, rattling them all off because they're all interlinked. And I'm keeping an eye on time and sales down here. You've got trend monitor down here. You can see bright blue and moving up through the VPOC through the various levels. So that's where TradeStation is. That was on Interactive, by the way. There are 2 versions. There's TradeStation, which is driven by Interactive, which is the one you saw there. And there's also TradeStation Securities, which is version 10 and above, which has radar screen. And you can run up to 1,000 charts through the radar screen on that platform, 400 on the one with the interactive brokers. And of course, with interactive brokers, you can trade straight through the screen, through your brokerage. It's just terrific, a nice and easy way to trade through the IB account direct from the TradeStation window. The same is true on TradingView. You can link the brokerages there. You've got TradeStation, which you can link to TradingView. You've got FXCM, you've got Saxo Bank, you've got and a couple of others which escape me. Capital, I think, is one. and they're always looking to add more. So TradingView is a great option. It's a great option for all markets, but particularly for stocks as well, and for trading them through your brokerage account, whatever that may be. So that's where you'll find all the indicators. In terms of where you'll find annacooling.com, there we go. All the books are up on Amazon, either in Kindle or in paperback, so you'll find them all there, plus all the links to all the various sites. And over on the education site, that's Quantum Trading Education. I know we've got some of our Forex students here today. This is where you'll find that. It is called the Complete Forex Trading Program because it does just that. And it's also now, we have added in the funded Forex program where you basically trade on money up to $2 million. You start on a 5, 10 or 15,000 account. You then multiply that by 4 once you've got to a relatively simple target we set you to prove that you can trade consistently, and we then multiply it by 4, so you get up to, if you start on a 15,000 evaluation account, there are 3, 5, 10 or 15, but if you start on the 15, we multiply that by 4 and take you up to 60,000, and then we double it thereafter, so you'd have 120,000, 240 and so on, right the way up to the 2 million. And you also get payback in profits. The profits on the evaluation we pay back in one lump at 35%, and on the remaining levels it's 50%, which you get paid monthly of your profits, and up on the million it's raised to 60%. So it's a fantastic program. We put it in place so that our program students had an upgrade path to put their knowledge to good use, in other words. So that's it. I hope you've enjoyed today. We will be back next week with more webinars. So thanks very much indeed for coming along today. Hope you've enjoyed it, and we will see you again soon, and bye for now.